Yo, Bitcoin Bulletin fam, get ready for a rapid-fire crypto download that's gonna blow your mind. First up, Bitcoin's holding its ground after a massive leverage unwind, but is this a sign of true maturity? Then, we're diving deep into the mystery of Bitcoin and Ethereum ETF outflows. Where is the money going? Next, we break down how absolute beginners can buy Bitcoin without breaking the bank. And finally, Arthur Hayes drops a bombshell prediction for Bitcoin's price by year-end. You won't want to miss this, so hit that subscribe button and ring the bell. Bitcoin holds after massive leverage unwinding, with signs of structural maturity. Bitcoin steadied today, showing resilience after a significant price drop that tested the market's nerves. This modest rebound is a crucial indicator as buyers attempt to regain control following a heavy bout of liquidations that sent shockwaves across the broader crypto landscape. The recent price crash was largely fueled by a massive wave of deleveraging. Last week's bull run, which had been energized by the Federal Reserve's rate cut, lost momentum as buyers couldn't sustain the upward pressure. This left the market vulnerable to sellers, especially in the thin liquidity conditions seen early Monday. Data from CoinGlass reveals that total long futures liquidations exceeded $1.65 billion on Wednesday alone, with Bitcoin and Ethereum accounting for substantial portions of this figure. The futures open interest for Bitcoin also saw a sharp decline, underscoring the rapid unwinding of leveraged positions. The situation was further complicated by negative ETF flows, with Bitcoin spot ETFs experiencing outflows of $363 million, the largest in over a month. This pressure wasn't confined to Bitcoin. Ethereum's futures open interest also plummeted, indicating a dramatic shift in leveraged positioning after its recent expansion. Funding rates for ETH futures even turned negative, signaling a sharp downside sentiment shift. These events inevitably raise questions about Bitcoin's future volatility. However, there are signs of increasing structural maturity. Over 17% of all Bitcoins are now held by institutional entities like corporations and ETFs, according to Bitcoin treasuries. The growing presence of these less emotional, more structured investors could gradually dampen volatility. Evidence supports this, with Bitcoin's historical volatility falling to its lowest levels since 2019 and maximum drawdowns moderating. This suggests that while short-term turbulence from leverage will persist, institutional holders are increasingly anchoring Bitcoin's long-term profile at lower volatility levels. Could this structural shift be the key to Bitcoin's long-term stability? Stick around as we unpack the massive ETF outflows impacting both Bitcoin and Ethereum next. Unraveling the mystery of Bitcoin and Ethereum ETF outflows. What happens when the primary source of crypto investment starts to dwindle? That's the critical question facing Bitcoin and Ethereum ETFs as they experience significant outflows, sending ripples through an already sensitive market. With investors keenly awaiting crucial updates from the Federal Reserve, clarity remains elusive in this volatile environment. September 22nd was a pivotal day, marking a substantial $363.17 million exodus from Bitcoin ETFs and an additional $75.95 million from Ethereum. This collective $439 million outflow has heightened investor caution, reflecting a growing short-term bearish sentiment. The drivers behind these decisions are multifaceted, encompassing macroeconomic pressures and evolving investor psychology. Several factors are contributing to this alarming trend. Firstly, fears surrounding potential U.S. interest rate hikes and an impending economic downturn are making investors risk-averse. The Federal Reserve's ambiguous monetary policy stance amplifies these concerns, promoting a broader risk-off behavior. Secondly, after recent price rallies, many investors are opting to secure profits, leading to a wave of withdrawals. Lastly, the influx of fresh capital has slowed considerably, intensifying existing sell-off patterns and increasing overall market volatility. Jerome Powell, the Federal Reserve Chair, is now in the spotlight, and his upcoming comments are poised to significantly influence market sentiment. Historically, Powell's rhetoric has impacted both traditional and crypto markets. With the dollar index holding steady and long-term yields under scrutiny, the implications of his message could either restore optimism or deepen pessimism, prompting investors to reevaluate their strategies. The ramifications of such large ETF outflows could be substantial for cryptocurrency prices. Significant withdrawals typically signal a shift in sentiment, potentially leading to reduced liquidity for Bitcoin and Ethereum. Analysts warn that without a revival of inflows, these cryptocurrencies might face considerable price challenges. Market sentiment is currently delicate. Some traders anticipate a downturn, with Bitcoin potentially falling below $110,000 and Ethereum facing headwinds if investor reluctance persists. Is this outflow trend a temporary blip or a sign of deeper issues? We'll explore how beginners can safely navigate the crypto markets next. Bitcoin for beginners: how to buy in without going broke. Bitcoin has captivated the world, but for many beginners, the question remains: how to invest safely without jeopardizing savings? While the crypto market is volatile and fraught with risks, understanding the fundamentals can turn chaos into opportunity. The first step for newcomers is choosing a trusted exchange platform. We recommend starting with a licensed crypto exchange app like Best Wallet, available on both iOS and Android. After creating and verifying your account with a government-issued ID and enabling two-factor authentication, you can fund your account via bank transfer, credit card, or even gift cards. Purchasing crypto is then as simple as entering the ticker symbol, such as BTC for Bitcoin, and following the prompts. Finally, you'll need to decide how to store your crypto: on the exchange, in a hot wallet, or a cold wallet for maximum security. Many beginners underestimate the volatility. Experts like Wilfred Day warn of sudden drawdowns of 30–50%, and Temujin Louis highlights the emotional toll. Nick Adams points out that the allure of quick wealth often overshadows the stress of significant price swings. Tools like Best Wallet aim to mitigate these risks by offering non-custodial management, biometric login, PIN protection, and scam filters that flag risky tokens, helping investors avoid chasing hype. For those seeking simplicity, Bitcoin ETFs offer exposure to Bitcoin's price without direct ownership. While convenient and regulated, critics like Danash Zahedi argue that ETFs contradict Bitcoin's decentralized ethos. ETFs trade control for convenience; wallets offer true ownership. Experts universally advise investing only 1–5% of one's portfolio in crypto, utilizing dollar-cost averaging, buying fixed amounts at regular intervals, to smooth out volatility and manage emotions. Balancing crypto exposure with traditional investments is also crucial. When it comes to storing your crypto, the mantra "not your keys, not your crypto" is paramount. While major platforms like Coinbase or Binance are familiar, holding crypto there means you don't truly control it. Non-custodial wallets like Best Wallet, which stores encrypted private keys on your device without a middleman, offer true ownership. For those hesitant about self-custody, ETFs remain an option, but for actual Bitcoin ownership, a wallet is essential. Even within retirement accounts, expert recommendations suggest keeping crypto exposure minimal, 1–2%, due to its volatility and lack of guaranteed liquidity. Navigating the crypto world requires discipline and the right tools. But what happens when a major industry player makes a bold prediction about Bitcoin's future price? We'll dive into Arthur Hayes' eye-popping forecast next. Arthur Hayes: Bitcoin to hit $250K by year-end on a wave of liquidity. Arthur Hayes, Chief Investment Officer of Maelstrom, has issued a stunningly bullish forecast, predicting Bitcoin could skyrocket to $250,000 by the close of this year. With approximately 100 days remaining, this ambitious target represents more than a doubling of its current price and signals a potentially explosive end to the year for the flagship cryptocurrency. Hayes articulated his optimistic outlook during a recent media interview at the blockchain conference, KBW 2025, in Seoul. He highlighted an anticipated market trend emerging between the end of the third and the beginning of the fourth quarter, which he believes will be the catalyst for Bitcoin's ascent to $250,000. His conviction stems from the expectation of significant new liquidity entering the market, primarily from the United States. Hayes specifically pointed to the U.S. Treasury's plans for currency expansion and anticipated continuous rate cuts from the Federal Reserve as key drivers. He argues that an increase in currency supply, coupled with Fed rate cuts, would create a highly favorable short-term environment for Bitcoin. While Hayes's prediction leans heavily on expansionary monetary policy, recent Federal Reserve communications have presented a more nuanced picture. Some Fed officials who supported the September rate cut have since expressed reservations about further reductions in October, adding a layer of complexity to Hayes's forecast. However, Hayes remains confident that President Donald Trump's efforts to reshape the Federal Reserve by replacing members unfavorable to his policies with allies will ultimately succeed. He believes this political maneuvering will pave the way for more money printing and sustained expansionary economic policies, directly benefiting assets like Bitcoin. Regarding the oft-discussed four-year Bitcoin cycle theory, Hayes adopted a neutral stance, suggesting it could either be losing relevance or still be in play. The theory posits that Bitcoin's price peaks approximately every 4 years, typically around 550 days after a halving event. Under this model, a price peak would theoretically occur in October of this year. Despite these cyclical considerations, Hayes emphasized that liquidity remains the single most critical factor for him. He asserted that as global currency supply is expected to rise, there's a high probability of the market cycle extending, further supporting his bullish outlook. Will Arthur Hayes's liquidity-driven prediction come true, or are other factors at play? Stay tuned as we wrap up today's top stories and deliver your lightning round recap. And that's a wrap on today's Bitcoin Bulletin. We saw Bitcoin showing resilience after a massive leverage unwind, hinting at structural maturity. We dove into the worrying outflows from Bitcoin and Ethereum ETFs amidst Fed uncertainty. We broke down exactly how beginners can safely buy Bitcoin without risking their savings. And Arthur Hayes dropped a bombshell prediction, seeing Bitcoin hitting $250,000 by year-end. If you found this update valuable, smash that like button, subscribe for more critical crypto insights, and ring that notification bell so you never miss an episode. Follow us on all social platforms for real-time updates and join the conversation in the comments below. We'll see you next time.